Good evening. It was decided to do an event in Dubai on the 23rd of September. It was a Friday. By popular demand, we have shifted this event to 24th September, the Saturday, so that it would be convenient for you people to attend. So I'll be in Dubai on the 24th of September at 6 p.m. Hope to see you in Dubai. Those desirous of participating in the Dubai event can contact us at the WhatsApp number given below or mail to the email ID given below. We will see you in Dubai. Kindly drop us an email or send a message on the WhatsApp number. Good evening. As we did with Dubai, we decided to move the event in Abu Dhabi also by one day to Saturday, so that instead of 30th September, we'll have the event on 1st October. So I will see you in Abu Dhabi on the 1st of October. Those living in Abu Dhabi need not take the pain of traveling to Dubai. We will see you in Abu Dhabi on the 1st of October. Those who want to see me in Abu Dhabi may drop us an email at the address given below or contact us by the WhatsApp number that flashes below. My team will get in touch with you. Thank you. Good evening and welcome back to Be Rich. Today I want to talk about mutual funds. I have not talked about mutual funds for a very long time. A mutual funds is nothing but a collection of people's money deployed in an asset class as decided by a fund manager. Mutual funds are promoted by asset management companies. They hire a fund manager, they put out a new fund offering in which they say what is the way they are going to invest. Like I have said, there are two types of mutual funds. There are active mutual funds and there are passive funds. And I have always argued that passive funds will always trump active funds over a long period of time. And therefore, one should stick to passive funds, especially for somebody who does not understand the market. In fact, I also have talked to you several times about a famous bet that Buffett took from 2008 to 2018. The bet ran for 10 years. Buffett said he would challenge anybody, any fund manager, to come and take a bet with him. He would put $1 million in the S&P 500X index, and the fund manager could make a choice of funds, and they would continue this bet. And totally, both of them put together would donate $1 million to a fair charity decided by the winner. The case went, nobody normally took the bet till a hedge fund manager decided to accept Warren Buffett's bet. And the bet was that Warren would bet $500,000 on the S&P 500 index. And equally, the hedge fund manager would pick a series of hedge funds which he thought would beat the S&P 500. The bet ran for some time. The first 2 years, the hedge fund did better. And then, seriously, the S&P 500 entered the fray and really swept away the hedge fund. Buffett explained why this happens. He says clearly the difference is in management fees. In management fees, the difference is 2%. An active fund charges anywhere between 2 to 4%, whereas a passive fund charges 0.25%. And Vanguard, the grandfather of all this passive investing, founded by his talismanic founder Jack Bogle, is organized as a mutual benefit company which distributes its excess profits back to the shareholders. That is, in this case, the shareholders are the unit holders. So Vanguard is the cheapest index fund available, though Fidelity has now launched one slightly cheaper. At the end of the day, in the comparison between active and passive, for a long-term investor, passive is better because the difference in management fee will compound over long periods of time if the person does not touch his money. While some funds may beat the index in the short term, it's impossible for one person to beat the market consistently. Such persons are available. Warren himself is available. There are people like George Soros who are capable of doing it, but though they don't manage money, other people's money, and it is too expensive for you to go and give them money. Recently, I read an article in the Wall Street Journal which opened up my eyes. Suddenly, 15% of the active funds were beating their benchmark indices. So this provoked a columnist in the Wall Street Journal, Jason Zivig, to do a study. What he found out is, without lying, there's a convenient way for the fund manager to show that he is outperforming the index. What happens is, past performances of the funds don't change, but it is possible for the fund manager to change the index against which he is competing. So whereas we will measure him against the S&P 500 or the Nasdaq 100 or the Dow 30. But what these fund managers do, there are several funds available, several indices available in the American market. The SEC allows him to change the benchmark to whichever index he wants. So, since my results are already known, the index performance is already known, all fund managers now pick up an index which they have already beaten, but which was not their original index. My original index is S&P 500. I am not beating the market. My returns are sub the S&P 500. But my returns are better than the Nasdaq 100 dividend index. Then what the fund manager would do is change the index to a Nasdaq 100 dividend paying interest. Such maneuvers, according to Jason Zweig, gives advantages of 0.8% over 1 year and between 2.4 to 4% advantage over 4 years. The SEC in America mandates even if you change the index, you will have to show a performance against the old benchmark for nearly a year, after which it disappears. But the person concerned has gained nearly a 4% outperformance when you compare over last several years. So an investor is easily fooled thinking that he has beaten the benchmark consistently over a longer period of time and he parts with his money. It's very important for someone to look and find out whether the benchmark index has been changed and whether the new index against which this fund is being compared, whether dividends are paid or included in that index. And the second thing, always insist on a comparison with the old benchmark. So when you have to have two sets of papers, you compare it with the old benchmark index with which it was being compared and then compare with the new benchmark. If there's a substantial difference in performance, it is very clear that your fund manager has shifted the index from one to another. Even the great Vanguard is not immune to it. Jason Zweig has looked at an energy fund where the index has been shifted thrice, but in an act of unusual clarity, which is not there in other funds, Vanguard has compared it with all the three funds over a long period of time so that the results are known to the investor. It is very clear that fund managers will go to any length to attract new money. This is one place where they are able to show superior performance without lying by a sleight of hand of changing the benchmark. Don't fall for it. Thank you for watching. Be Rich. If you like the content, hit the subscribe button. Turn on the bell notification. If you do not turn on the bell notification, you will not be notified whenever we put out a video. Once again, I thank you for your support for Be Rich. I am visiting the historic town of Trichy on the 27th of August. We are planning to hold a meeting in Trichy where I get to meet my subscribers and people who follow me on social media. This will be a live interaction with my friends, followers and subscribers of my channel. It is very interesting. We have had several events in various small towns of Tamil Nadu. If you wish to participate in that event, a WhatsApp number is given below. You may contact us on that WhatsApp number or you could drop an email to the address given below. My team will respond to you. I hope to see you in Trichy on the 27th of August at 6 p.m. Thank you for supporting Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.